In this video we're going to look at the O workpaper for other current liabilities. This should be a fairly quick one. In this workpaper we're going to be capturing all the sort of miscellaneous current liabilities. We've already looked at creditors, which is generally your accounts payable, and that usually refers to something that has already been invoiced at year end but remains unpaid. On this workpaper we're going to gather together much of, but not necessarily all, of the remaining items on the balance sheet under current liabilities. So let's have a quick look at this what's here example. What we have here is I'll quickly switch on some annotation here. We have two accounts that are the shareholders' current accounts, Gordon Watson and Shane Fairbrother, and we're going to copy those into the workpaper O under shareholder current accounts. And there you'll see I've already entered in those numbers from last year and this year. The next account down happens to be the credit card, and we already have that recorded on workpaper A. The next line down is accounts payable, and that's already recorded on workpaper N. The next three accounts here in MYOB, because MYOB uses three accounts for GST, these are all GST numbers, and those are already recorded, or they will be recorded shortly, on workpaper O3. They don't go on workpaper O. And then the last number we have in this section is accrued expenses, and that gets recorded on workpaper O1. So our purpose on this workpaper is really to make sure that we know that everything in this current liability section has been catalogued on a schedule. So this is sort of our everything else schedule, knowing that some items have yet to be recorded, particularly for accruals and GST. We want to make sure that everything has a home place to start with. The only thing that we're really going to be concerned with on this schedule, or actually let me back up, what we want to do once we have captured this information is we want to ask some questions. Should there be income in advance? Have they received income before they've actually done the work? And usually that would be something that would show up on their client questionnaire. If we noticing as part of our knowledge of the business that they do invoice things in advance, or they sell vouchers or that sort of stuff, we will be looking for income in advance type items. For shareholders' current accounts, we expect those to be credit, which in this case is a positive number on the balance sheet. That's all okay, but the moment it goes into an overdrawn state or a debit state like this one has, we may be have to look at charging interest. IRD rules say that if we don't charge the certain minimum level of interest according to IRD rules, then we might have to pay fringe benefit tax, which we actually want to avoid if we can. So you'll see here a task that says if shareholder current accounts are overdrawn, consider interest or FBT. The catch with this is that this section here is one of those sections that does tend to change quite considerably during our accounts process, and in this case we will be allocating profit, and we can see that profit is currently at $125,000, so there's a good chance that we'll be allocating profit back to the shareholder, in which case that is going to then reduce or eliminate his overdraft and put it back into an in-funds current account between him and his wife. So if that's the case, then we have nothing to worry about. So my advice, particularly with overdrawn shareholder current accounts, is leave this step incomplete, and we'll come back and review that again on our second pass or our final pass through the accounts, because that's when this number is likely to come a lot closer to being final. We've got some template areas here for account 1 and account 2. If there are other types of accounts that are listed in the current liabilities that we need to sort of make notes on or reference schedules to, but for the moment that's everything that we need to capture.